Here's what nobody conveniently tells you about your VA loan payments. And stick with me in this video, and it may completely change your perspective about the strategy of home buying. Most military families think that their whole mortgage payment goes just towards paying off their home loan every single month. But here's the truth. While a little bit does go towards actually building your equity and your wealth in the property, the first few years of making your mortgage payment is really building your bank's wealth. And here's the truth for you when it comes to actually being the home buyer of the property, which is the longer you hold on to the home, the more the system shifts to actually work in your favor. And as a result, by the end of this video, I think you'll see why selling your home early may actually be one of the biggest financial mistakes that you can make. I'm Vermeer, and I help military families navigate real estate decisions. And this can be a complex topic, so let's jump in and break it down in a way that actually makes sense. Let's start with the basics. Every month, when you make a mortgage payment for your VA loan, your money is going to be going to a couple of different places. The first part goes towards principal. And principal is the actual home loan balance, or the remaining balance that you owe the lender and that you are paying off piece by piece. The other part goes towards interest. And interest, quite literally, is paid on the total remaining balance of the loan that you have outstanding. Your interest payment is always going to be represented by the following equation, which is the remaining balance you have on the loan times your interest rate divided by 12 months. But here's the key part that I think a lot of people don't fully realize or comprehend when they hear that. And that is, you're going to be paying the vast majority of your interest very early on, while the remaining balance of the loan is at its highest that it'll ever be. And that means during the first 5 years of your loan payment, the majority of your payment, the majority of your mortgage payment is actually just going towards paying off the interest on the loan. Let me give you a real example. Let's say you bought a $400,000 home with a 30-year fixed rate VA loan at a 5.75% interest rate, which, as of the recording date, which is February 3rd, 2026, is roughly what you could get. And in that case, your monthly payment would be about $2,335. And in your very first payment, the amount of your mortgage that would go towards interest is $1,917, whereas the amount going towards your actual principal, the amount going off towards paying off your loan balance, is only $418. That means in your first payment, 79% of your mortgage is going directly towards interest, whereas only 21% of your payment is actually going towards paying off the loan balance. Quite literally, your loan balance would go from $400,000 down to $399,581. So it goes down basically, again, about $400, despite the fact that you paid $2,300 in a mortgage payment. After 5 years of payments, you would still be paying almost $1,800 in interest and only about $550 towards your principal. And after 10 years, it's still about $1,600 that's going towards interest and only about $735 that is going towards actually paying off the loan balance. It's not until year 18 of paying off the mortgage that the amount that is going towards your principal actually exceeds the amount of interest that you're paying towards the loan. And in this case example, it wouldn't be until March of 2044 until that crossover happened, again, from paying more towards your principal than you are towards paying more in interest. Trust me, I know that that can sound and feel really scary, but when you're able to take a step away and look at this from a longer time horizon, this is where it can become really powerful for military families, and understanding this concept can really change the trajectory of your financial future. It's the power and magic of time. The deep financial benefit you get from home ownership comes in the year 20 to 30 of ownership. Because not only are you expecting reasonably for your home to appreciate over the span of 20 to 30 years, but you are really paying off at a much more exaggerated rate the loan balance in years 20 and 30. So as your property continues to appreciate and your loan payment, the amount of debt you have on that property, is getting paid off at a very extreme rate in year 20 to 30, that's when you're really starting to develop serious equity in that property and seeing the financial benefit of home ownership. And that's what most people just don't fully realize or comprehend or consciously put themselves in a position to prepare for. And it's also exactly why selling in a very quick timeline kills the wealth building part of home ownership. Think about it this way. In your first couple years of home ownership, again, you are paying the vast majority towards interest. And as a result, if you buy a home and then 3 years later when you're about to PCS, you're thinking about selling, in this case with a $400,000 home, 5.75% interest rate, 30-year fixed rate loan, over that 3-year period, you would have paid just above $22,000 off of the balance of the loan. But in the same time, you would have paid over $91,000 of interest. $91,000. So let's say at that point, your loan balance is about $377,000 and you want to sell. Well, selling real estate is expensive. There are fees and costs associated with selling your home. So you would need to sell that property for about $410,000 just to break even. And what if in that 3-year span, the housing market in that area dips a little bit? Now you're in a really dangerous spot. And even if property values do go up a little bit, you're able to sell the property and make a little bit of money. You're not seeing the full benefit of what real estate can be. Because when you sell and then buy again in a new duty station, you're just restarting that counter and paying majority interest over and over and over again. I see this all the time with military families. They buy a home, they get a new set of orders, they sell, they PCS, and then they buy again in a new place. And they do this over and over and over again in a way that never allows them to see the serious wealth building side of home ownership. So what should you do? How should you be thinking about this? Well, before we get there, if this video has provided you value, if you can just please hit the like button. I know it's silly, but it does help the algorithm. It helps the channel. It helps get this information out to as many military families as possible. And if you're interested in more future real estate videos that are easy to understand, designed for military families, then subscribe, because that's what we do here. So how should you be thinking about this? Because look, the VA loan, it gives you an ability to do something that a lot of people do not have. You're going to be able to buy a real asset with nearly $0 out of pocket. That is huge. Like, that's an incredible tool if you are prepared, educated, and being really strategic about how to approach this major financial decision. Here's what I mean. When you get orders to your next duty station, instead of selling, you need to consider renting. But in today's interest rate environment, it's not as simple as it was in the past, with all the people telling you, oh, just rent the property out, just rent the property out. The majority of times now, the rent rate in your area that you're going to be buying is not going to cover the totality of your mortgage. But I don't want that to fully deter you. And this is where you need to be prepared. Because if you know this is an area that you might want to move back to in the future, or this is an area that you just believe in from a real estate perspective, i.e. a San Diego or a Hawaii or a place where there's always going to be a tremendously high demand to live, then it may be a good opportunity to purchase that real estate. But you need to be aware that the real benefit of making that decision is not in 2 to 3 years from now. It's in 20 to 30 years from now. So you need to prepare yourself emotionally, financially, and logistically to handle the ups and downs in the meantime. And look, there may be gurus on Instagram and TikTok telling you all these advanced strategies about how to do all these crazy things. But for the majority of the normal people like us who just want to buy a home or just make decisions that may benefit themselves and their family in the long run, you need to prepare yourself for the worst case scenario. And this kind of worst case scenario would be that you PCS, you decide to not sell your home, and now you can't find a renter. Or the rent is not enough to cover the entirety of the mortgage. But in order to see the benefit of that decision that you made to buy the home, you need to be in it for the long run, which is going to come with real financial preparation to be able to withstand that and be able to make a mortgage payment and still make your next rent payment or your second mortgage payment on the area that you just moved to. Again, these things can be good or they can be bad. You just need to be prepared to kind of weather the storm and really see the benefit and financial opportunity of home ownership. It's when people are not prepared and they have to make decisions out of desperation that real estate becomes a liability, right? Again, everything that I'm telling you here, it comes with real risk. Just like the stock market is volatile and can go up and down, real estate prices can go up and down. That's why it's important you have a plan, a strategy, and the financial situation that matches that strategy to be able to see your decisions in the long run, because that's where the real benefit comes from. I know this stuff can feel overwhelming. It can be a lot in the midst of PCSs and moves and the challenges of your day job. But understanding this fact, understanding how mortgage payments actually work and where the real benefit is in home ownership is such an important thing for you to conceptually grasp in order to make decisions that actually benefit your financial future. The VA loan isn't just about buying a home. It can be an incredible wealth building tool, but only if you use it smartly. So here's what I want to know, and drop the answers in the comments. And the first thing is, are you thinking about buying a home when you PCS? And if so, where? And the second thing is, what is your biggest concern right now when it comes to that idea? What things can we talk about to help you build a strategy that will make you feel more comfortable and confident in your decision? And if you're thinking about or getting ready to use a VA loan to buy a home, please, if you have any questions at all, please reach out to me. I'm going to put all of my contact information on the bottom of the screen. It's also in the description. It's also in my bio. Text me, call me, email me, whatever it is. It is not my goal to convince you to buy a home. It's my goal to educate you so you're making informed decisions about the pros, the cons, and the trade-offs of everything so you can make the right decision for you and your family. And if I can be a benefit for you, then again, please reach out. It would mean the world to me, and I'd love to help. And again, if this video was helpful, please, please, please give me a like. Feel free to subscribe to the channel. I'll continue to put out educational content about military real estate, and I look forward to it. So thank you so much, and I'll see you next week.